I texted you this morning. I said, what are we wearing? You know,
wear your blue plaid shirt.
Because
dude, we're gonna look good. It's like we're part of a band or something.
Yeah,
hanging out in the park.
I was in my closet agonizing, you know, and it was just the spirit told me to you know, you gotta sync up here today.
It's a good safe shirt to wear, man. I like it.
Well, I got a little bit of flash here, you know.
I like it. I like that. You spend more money on your shirts than I do. Your kids are a little bit older. They don't splash shit all over you like mine do. What's up, guys? Welcome to another episode of Spill the Beans. My boy Jennings Smith is here. Jennings and I have become good friends over the past 3 years. He came out to Commercial Empire back in, I want to say, March of 2019. Reluctantly, by the way. But he's done some amazing things. And I don't want to take credit for his success because this guy would have been doing some big things anyways. But I like to think that maybe I was helpful as a catalyst to help him go to the next level. And he's just an amazing leader of leaders. He's helping a lot of people, doing a lot of amazing things. You guys will learn a little bit more about his My First Million in Multifamily Facebook group and his deal room and some other stuff. So definitely connect with him. But check this out. We're going to talk about a lot of good stuff and a lot of how he's gone from 0 units to almost 1,000 doors in the past less than 36 months. So tune in, meet my boy Jennings. Jennings Smith, how you doing, brother?
Hey, Tim. Thanks for having me, man.
Good to have you, man. So we got a lot of good stuff going on. You got a lot of good stuff going on. We both have a lot of good stuff going on. We're both here in Charleston. I get a lot of messages like, oh my gosh, there's so many big real estate people in Charleston. And I don't know, man, maybe it's just because we hang out and it's a great place to live and a lot of people move down here. But dude, it's good to have you on Spill the Beans, brother.
Yeah, man.
Tell me a little bit about more. I already gave an intro. A lot of people know your background, but tell me about what you were doing. Let's give a high level on, you know, kind of how you got started in the construction or where you were when we first met about 3 years ago.
Yeah, 2.5,
maybe a little, years ago. Yeah, 2.5, 3 years ago. And then you came out to Commercial Empire, and we, you know, continued the relationship from there. So,
yeah, you know, 19 years old, got my builder's license, and started building houses and custom homes, renovations, bathrooms, and I knew that I wanted to get some rental properties. My dad had about 14, 15 rental homes that he had bought over the last 10 years, and it was really slow, though. You know, I was grinding it out in construction, making a decent living, but I knew that I wasn't building long-term wealth, and I was going to wake up and be 60 years old and not where I wanted to be. So I had bought a few trailers and some rental homes, and I thought if I get 1,000 doors, that was my goal. I wrote it down, 1,000 units, and my banker said, dude, you're going to be radioactive to banks, and that's a lot of risk. Like, you do not want to own 1,000 single-family homes.
Yeah. So
you should go the multifamily route or commercial or whatever. And so I ended up buying an online internet course for about $1,000 and studying that, but I really didn't pull the trigger on anything for about 2 years, and eventually got up the courage to close my first 12 unit, which was out in rural North Carolina, Williamston.
So in North Carolina?
North Carolina, about 5 hours away. So my first purchase was remote. And
how did that go?
It went pretty well. You know, it was.
And what year is this?
This was in 2019.
Oh, okay. So right when we met, dude.
Yeah, February. Like, yeah, I came out to your event the next month. Yeah. So I just closed that. Got it for like 250 grand for a 12 unit. It was full, but the guy was older. It was like, you know, the redheaded stepchild of his portfolio. He didn't want it anymore. He owner financed me 70%, and I got the 30% from an investor. And yeah, just kind of like instituted a utility bill back and raised rents and was on my way. But I saw I was scrolling through Facebook and I saw you walking through one of your properties, I think in Georgia.
Yeah.
And I don't know if it was a Facebook ad or if it was just you on a live, but you were talking about how you had bought it for 15 or 20,000 a door. You were doing this rehabs, and you walked through the whole process of the BRRRR model. And I thought, man, that is so like compelling. Like I've got to meet this guy. And so yeah, I signed up for your, well, I hesitantly signed up for your event.
Dude, I remember like because I didn't own the brand back then. So we had like a sales team, and I worked with a publishing company, and I just kind of showed up, and one of the sales guys like, you know, this guy wants to come out. He's from Charleston. You know, like feels like he's got some ties with you, but he wants to make sure you're legit. He wants to make sure you're the real deal. And I was like, and I hated jumping on phone calls to help the sales guys. And I was like, fine, dude, yeah, whatever, I'll have a phone call. And we talked for a while. I feel like we talked about Charleston. You're like, dude, is this legit? Is this real? And I was like, yeah, it's real. Like I'm doing it right now. But it was good, man. And we got to meet in person.
When people see people on the internet, I think I don't know, you see that person as sort of bigger than life and maybe just this actor, and I felt like I could bring something to the table, and I just wanted to make sure that you were a true operator and knew what you were doing. And you told me, hey, cream rises to the top. You know, so if you come in here and you know, you apply yourself, put in the work, then good things will happen.
Yeah.
So.
And you did, man. You took some massive action immediately, and dude, you brought the Somerville deal to me, and it was just too small for what we had going on at that time. Because 2019, man, I went on a tear of buying like 2,000 doors. We were buying like 400 unit packages and 700 unit packages and all this big stuff. And that was, I was like, dude, I'd love to do it. I think it's a good price. It's just a little bit too small, or whatever it was. And you're like, all right, well, and you connected with some other people through the program. Well,
through the event.
Yeah, which is like, people don't realize, like they think, oh, let me go out and get the knowledge. They totally undervalue the relationships that come from events. Absolutely. And hanging out. Like you host masterminds, and you got your My First Million in Multifamily. Dude, just the connections in those type of rooms, and having conversations and talk. Like you found some amazing private money lenders, loan sponsors, and everything that you took that deal down with and made big money on it, right?
Absolutely. Yeah, we actually just refinanced it like 2-3 weeks ago.
Was that the $1.2 million check I saw?
Yeah.
Yeah. So, now, did that include
that was
the
investors' money? So we got all the investors' money back out. We did not have proceeds above.
But now you have just house money in play on a deal that you have, what, a 70-75% LTV loan on?
Yeah, 75.
Dude, and now you have millions of dollars of equity in a deal. Nobody's money's in it anymore. And now you can non-recourse loan, and you're sitting on this thing for the next 10, 20, 30 years, letting your tenants, providing an asset, right, to other people, and having other people pay for your asset. Think about that. Think about the concept of buying something, providing enough value to others where other people are willing to pay you for that. It pays for the operating expenses of that. It pays down your mortgage on the property, and it puts cash flow in your pocket on a month. Dude, it's unbelievable to me. Like the whole concept is just unfathomable about how amazing it actually is, you know?
See, that's why I came to the event.
And there's a lot of work though that goes into it, right? And I think we're talking offline on the walk over here to the park, and we're like, yeah, what do entrepreneurs talk about when they're grabbing coffee? It's really usually the problems, you know. It's really like the heartache and the headache, and how do you troubleshoot a lot of that stuff? But dude, that's why you want to take advice from somebody that is doing good stuff, right? Like I think I see a lot of people taking advice from their family members, their friends. And I don't think that you realize, dude, if you want advice from somebody who's successful, you typically have to pay for it. That's called consulting. You know what I mean? Like if somebody's giving their opinion away for free and they're not charging for it, how valuable is that opinion? It's like, dude, if you buy into that opinion, you buy into that lifestyle. Whoever that person is, whether it's your broke cousin or your broke buddy, who's living paycheck to paycheck, you buy into their opinions and their advice, you're gonna buy into their lifestyle. Same thing with sitting down, having coffee with guys like us. You know, we know where we are in life, and we're able to trade ideas and strategies and talking about crypto stuff, which I wanna get into. Dude, it elevates you, right? It's like, whose opinion are you buying into though?
No, I mean, I run a Facebook group, as you know, and there's so much bad advice that's given in that group. Really? And it's given up with the biggest confidence. Like these guys, you would think that they got, portfolios bigger than ours. And the advice is just, it's terrible. And you have to just consider the source. Where do you want to go? And I think that's important, because sometimes that source can be opaque, especially online. You don't know if they're legitimate or what they really have or what they're doing. And so I think that finding a mentor that is transparent with you and is where you want to go is critical. And you also mentioned the network. the wealthiest individuals, the most successful individuals, they're focusing on that network and relationship capital, like Mark says. And they're not necessarily trying to find the knowledge. I mean, the knowledge is important, but those relationships and your circle of influence is even more so. And that's where I did see a lot of value with coming to your event and future events. And that's where I met Mark. He's one of our mentors.
Yeah. That's where you met Evans.
And he's, you know, changed my life. You know, me too. So
I think, you know, people say like, it's not what you know, it's who you know. And I think there's a lot, to me, I knew a bunch of dipshits, right? When I heard that statement for the first time, and I was like, I know a lot of people, but like, nobody can help me advance, right? I just didn't know the right people. I wasn't in the right circles, I don't think. And it was like the blind leading the blind with everybody that I was hanging out with and going to free events with, and maybe there was a couple of like diamonds in the rough, I would say, for sure. Some good people and good connections and stuff that I made, but it was a game changer. Like when I joined Mark's mastermind, that was like, it's totally different, dude. It was totally different. It was the people who were actually investing in themselves, people who were, dude, and I think that holds a lot of clout, right? Like to be able to invest in yourself and stroke a check for $30,000, $40,000 because you know that you're worth it, dude, that's a different caliber of individual, you know?
absolutely, absolutely. You're paying for who's not there, you know?
Yeah, a lot of times. So, all right, man, so you've had a lot of success. How many units you got now? 600? You sold some?
No, we're at 940 that we are like significant GP owners, and then we have a couple hundred other that we're like just raised a small piece of.
Yeah.
So
you got a little piece of the GP or LP side?
GP side.
Yeah.
On those, but the majority, you know, we got Yaden and I have about 24% each of 900 and something, 940 doors.
It's amazing, dude. It's a good chunk of change, good chunk of equity. What's the goal there? What are you planning on getting that to? Because I know you got your hands on a lot of stuff. You got some e-com stores, you got a lot of stuff going on in crypto, you got a lot of things going on the real estate education side, and then obviously your real estate holdings.
Yeah, you know, my plan with it is to close 4 or 5 good deals a year. I do get some good deal flow from networks that I'm in.
How many? What is that? $50 million of deals? Is that $100 million of deals?
I would say probably in the 10 to 20 million a year. I'm not trying to put all my focus on
probably pick up
that.
400 or 500 doors.
Yeah.
So kind of what we're thinking.
Yeah, that's kind of where we're at right now, but that may change. And as we build our team, like I just took on an executive assistant, and I think that's going to change my life a lot for the better.
Yeah, man.
You know, so I may feel a little bit more aggressive once that yields some fruit.
So how'd you find them? What are you paying them? Are they virtual? Are they in person?
Yeah, that's a
it's like the debate, right?
So I started going down the virtual route. I thought I'll go virtual, but I think that it really isn't what I need for where I'm at for whatever reason. I'm not saying that's a bad move to go, but I needed, I think, somebody a little bit more interactive, but I was scared. Scared to commit the money for one, and scared to mess up somebody's life, right? Have them change careers and then it not work out, because you're working with them very closely, right?
Yeah.
So I had this lady, and she was actually one of my investors, and it invested in a lot of my deals, and she joked around, but she had a very prominent job working for a very prominent figure that everybody would know if I mentioned. But she, so I was like, hey, you know, well, if you want to, and then she blew me off. So I was like, okay, so she was just kidding about that. Well, then a few months later, she wanted to have lunch and said, hey, if you're serious about that, then I'm serious about that. And then it got real, because I was thinking.
And she was an executive assistant for somebody else?
Yeah, very, very high level person, and she was running a department of his company. Yes.
Got it.
So I'm thinking, wow, this lady is going to be unaffordable.
Yeah.
But her financial situation with her spouse really didn't need to do it for the money, and so we kind of talked that through, and yeah, you know, we were able to hire her at a pretty reasonable rate.
That's awesome.
And she's good, overqualified. I kind of feel like how you felt when you got Sarah Maxwell working.
Yeah.
For you, you know. So.
Yeah. And Sarah, I hired Sarah the first of this year, maybe, I don't know, maybe it was beyond that, and it was like February, March. She's already gotten like 2 raises, I think. So be careful. No, no, but she's worth it though. You know, I had a conversation with her actually this week, and kind of reworked the comp plan to make sure that you know, we're in the same boat, rowing in the same direction, and she feels valued and all that stuff. And I think it's important, man. When you have good people on your team, you gotta pay them well, and they become an asset. I think a lot of people see personnel and staff as overhead, as an expense, and I think if they're first of all, you know, qualified, right? So you have to like screen properly. If they're trained properly, and then you measure their performance properly, they're an asset, right? Hiring the right people is an asset. If you hire somebody and you pay them, you know, $100,000 a year or $50,000 a year, like, you should be able to figure out a way to generate 5 to 10x on that salary, you know. But my hard truth was I was a shitty, horrible manager. I was a shitty, horrible leader of my team early on, right? I was good at bringing on A players who could just, you know, I didn't screen them, I didn't train them, and they just kind of figured it out because you're like, I'm obviously not going to get the support from Tim, so let me go and try to figure it out over here. But as soon as I hired a B player or a C player, and I needed to, you know, fill basic roles, basic jobs, basic tasks, like, dude, they were in and out. It was a revolving door of people leaving, and or me just creating more expenses and having to fire everybody. It happened twice to me when I started my management company. And then I realized the only common variable in all that was me. You know, it wasn't all these people. They were all horrible. It was me being a horrible boss. Kind of had to look introspectively at myself and figure out, how do I become a better leader, you know? And but yeah, I mean, dude, there's been a couple of pivots in my life, and you know, one was like understanding residual income and the idea of residual and passive income, and well, I guess probably early on was entrepreneurship, then residual income, then really joining a mastermind, getting around the right mentorship, and that then led me down to like A players, and the A players changed everything for me. That's what was giving me the rocket ship kind of takeoff, you know.
Well, something that I kind of was just mulling over, where everyone talks about mindset in this space, right? You got to improve your mindset. You got to change your thoughts. And while that is true, I think that it's really hard to do that when you don't have a support group that's teaching you how to think. If you don't know how to think 3 steps ahead, how are you going to do that without seeing, okay, this is how this guy is doing it. This is I can borrow his belief. I can shift my paradigm. If he's doing it, I can do it. That was one of the biggest things that I took away from your event was, yes, this guy is a hard worker. Yes, he's charismatic. Yes, he's built something big, but I can do that. Like, I'm charismatic. I can work hard. I can apply myself. He's 3 or 4 years ahead of me, but why can I not do that? Why not me? Yeah. You know, and that only comes by connecting with the right people, and that really can cement the mindset. You got to be open to the mindset, but to get that circle of trust that's pushing you forward, I don't think mindset alone, because I read a lot of books, man. I read a lot of books with very little results. When I started hanging out with different circles of people, that's when the results started to change. Yeah, big time, man. And I think you bring on a great point of, like, you know, you can read about it in a book, but there's no connection there to somebody who you don't really know who they are. They just wrote a book. I think when you start seeing the results from people that you actually know and you've had lunch with or you have had a beer with, it cements it and makes it that much more real. And then you borrow their belief, right? If this guy can do it, I mean, he's smart, but he's no smarter than me, right? He works hard, but he doesn't work any harder than I do. And like, I know that if he can do it, I can do it. And then the other one is like, well, once I did it once, I know I can do it again. Yeah. You know? So now I bought a 12 unit. Now I bought a 65 unit. And once you understand that process, dude, in commercial real estate, there's a limitless number of properties out there. All you got to do is just rinse and repeat and just do it over and over and over again. And then the question becomes, how fast can you do it, right? And how much money can you raise and make sure that your operations and everything stay in place, which we were talking offline, and like, that's where I've seen a lot of people trip up. There's people who can go and raise money, and there's people who can find people to sponsor the loan. Maybe they can find a deal, but at the end of the day, man, you can take a deal down, but you can't keep an apartment building deal unless your operations are dialed in. You need a phenomenal contractor, you need a phenomenal property management company, you need a phenomenal asset manager too.
those three things, without those three things, I think people are going to trip up and find themselves, there's a lot of people taking deals down right now, especially paying top dollar for some deals just to get into the industry. Dude, if you don't have those three things, you can find yourself in a tight spot.
In teaching and education, something that I've noticed is 90, maybe even 95% of people, they'll never close that first deal. And because they don't close the first deal, they don't close the second one.
Yeah.
But if you can just get that first one safely, like you're talking about, safely across the finish line, it is like the sky's the limit. It unlocks everything because if you can do it once, you can do it twice or 100 times if you want. But it takes a lot of persistence and effort to get the first one over the finish line. At least it did for me.
For sure. And that's the hardest one. I was on a podcast yesterday, and they're like, we're going to do a segment called Best Deal, Worst Deal. Like, tell me about your best deal. I was like, I can't really tell you about the best deal. I'm going to tell you about the most impactful deal. I'm going to tell you about the deal that made the biggest difference, and that was my first deal. That first deal was the belief system that said, if I could do it once, I know that I can do it again. Now, how many times can I do it? That first deal is the biggest
deal. Tell me about the first deal. The first deal you did.
That was the one up on Tillman Street in North Charleston, the one I bought with my credit card.
The little single-family home
that was a duplex, yeah. But
okay.
My first apartment building was an 8-unit in Cleveland, Ohio.
Okay.
That's the one that was like a light bulb went off of like the scale of doing apartments versus single family. I was like, holy shit! I go to one property. It was an 8-unit, but still, I go to one property instead of 8 properties. I have one tax bill instead of 8 tax bills to pay. I have one utility bill to set up instead of 8 utility bills to set up, right? I meet my contractor at one location instead of 8 locations. Like, there's so many levels of delivering stuff, collecting rents at one location instead of 8. Like, there's so many levels of scale by having everything in one location versus going to 8 or 80 or 800 locations. I was like, damn, this is what really connects and resonates with my goals, with my ambitions, with what I want to accomplish. You know some of them too, right? Like, we know some of the people who have done hundreds, if not thousands of single family, but I don't know anybody with a single family portfolio over 1,000 doors. And most of them I don't know with more than 300 or 400 doors. Because, dude, you are confined. You're confined by it, other than like big hedge funds, but
I think those stories are important for people that, we're trying to help to hear. It's like, Tim Bratz has 4,500 doors and hundreds of millions of dollars of real estate, but it started with a duplex. It started with an 8-plex in Cleveland, Ohio that was probably pretty crappy, and you weren't too sure about it when you bought it if it was going to work out. I mean, I started with a double wide that was gutted, no AC. But doing things and taking that action and getting on the bicycle, you can turn it to the direction you want to go instead of just being paralyzed.
But you got to get it going, dude.
Yeah,
you got to get it going. You got to get the wheels moving, and that's why, like, I don't. There's a lot of people who come out to my event, and it's called Commercial Empire. So everybody thinks like these big grandiose ideas of buying 100-unit buildings, and most of the other people in the space who teach apartments teach going out and buying 75 units or bigger because there's scale and on-site management. And yes, that's a big value. And it creates even more scale as opposed to just, a 20-unit building. You can do even bigger things with bigger buildings, but dude, you don't just fall into 150-unit doors, right? Or a 150-unit building or a 400-unit portfolio. It's like you gotta think about, I don't know, if you're a seller and you got somebody who has never done a deal versus somebody who owns 2,000 doors and you own a 100-unit building, who are you going to go and sit down with? Who are you going to even like take there? Even if this guy who comes in at 10% more at a higher price point than the other person, you'd be like, they're not going to be able to close, So you don't take them as a credible buyer if there's no portfolio or no momentum or no experience at all built up. So like, that's why I always tell people who come in, like, dude, you got to go out and build the portfolio, build your balance sheet, get the momentum. The momentum is more important than anything. You can't raise money on 20 units until you raise money on 2 units. You can't raise money on 100 units until you raise money on 20 units. You can't raise money on 200 units until you raise money on 100 units, right? Like, get that going and just show the momentum, show the snowball and the forward motion of that. That is worth more than the size of the deal, than the class of the deal, than anything else. I hate when people are like, what about, well, like, I need as much equity as I need on this deal, or I need as much equity is possible, or like this is, and they think this one deal is like the ultimate deal, which to them, for their first deal or first couple of deals, it is a big deal. But dude, I never thought that way. I always thought, what does this one deal lead me to? Right? From me taking down this deal, what does that do to my balance sheet? What does that do to my experience? What does that do to my reputation, my portfolio, my resume? Because I took down this deal, what does it lead me to? The next 5 deals, 10 deals, 150 deals that I can take down. And I think it's really important for people to understand that. Like what is it? Like, this is not a short-term get rich quick. It is a build wealth over time type of thing. And I think it's really important for people to realize, what does this deal lead you to, and focus more on that versus just focusing on this first deal.
Well, something that, like a recurring theme with your talks and your events, is investing in yourself. And we're talking about the masterminds, investing in yourself. And in these groups where people are trying to get involved in a deal, they're trying to make a partnership, whether it be with me or you or other people in the networks that we're involved in, and yet they're really not bringing anything to the table, right? They don't really understand underwriting. They're not bringing a deal. They can't find a deal because they don't have the network. They don't know how to raise capital. They don't have any capital. And all they want is a piece of equity. Well, that's not how life works. And so if you can invest in yourself and understand whatever piece that you think you're going to be a specialist in, then and the more irreplaceable that piece is, the more equity you're going to get, the faster you're going to get. It's like, I can be boots on the ground. Well, so can anybody else with 2 arms and 2 legs.
Yeah.
I can do construction. Well, there's a lot of contractors out there that'll just do it for a flat fee. I don't need to give you equity for that. I can raise money. Okay, that's valuable. I have $1 million in my bank account. Okay, that's valuable. I have a great wholesaling network and I can get deal flow. That's valuable. So those are the things. It's like, if you don't focus on making yourself more valuable, then you're not going to get into deals. People aren't just going to hand you equity.
It's like, all right, even if you are a contractor, what's the edge, right? If you're a general contractor, like what's the hardest part of contracting construction right now is finding labor, and finding reasonable labor. You and I were talking about, like, I have a contractor who brought in a bunch of kind of like Central American workers, gave them jobs, they're working on their green cards, like all this stuff, creating a huge opportunity for them. Then he also controls the labor force now, so now he's not subject to a bunch of subcontractors. He actually has built out his entire infrastructure with amazing laborers that can do flooring, tile, paint, fixtures, electrical, plumbing, framing, landscaping, anything at a lower rate than most others, right? Than most American tradesmen, So he's able to bring them around and move them around the country. That's a huge value add, right?
Yeah.
And so, like, he's able to save me money on projects. And because he can save me money on projects, I'm willing to give him equity to balance out the amount of money that he saved me. And now he's more committed to me. He sees me as a long-term partner. He's turning down other jobs that he might be able to make more money on, but he doesn't need to make more money. He wants to build more wealth. And I'm able to offer an opportunity to him because he's able to solve a problem for me, And so I think, even if you are boots on the ground, tell me why you're better than anybody else and why you deserve that equity, or show me that you're worth it. I think there's a lot of people who, you ever listen to Jim Rohn? And he's passed, but he's one of the biggest influences on my life, and I've never even met the guy. And he actually passed away about 6-8 months before I ever heard of him. And I've read all of his books. I've listened to all of his stuff. And one of the things he always says is, like, always do more than you get paid for to make an investment in your future, right? And everybody's like, well, here's what I'm worth. Here's what I deserve. Like the market doesn't pay people for the value that they are. The market pays people for the value that they add, right? So, like, show me the value that you're adding to something, not what you're worth, but like, how can you increase the value? How can you increase the value of this building? If you can get me into this apartment building and you can save my cost basis $500,000, I'll kick you some equity because of that, right? If you can negotiate a better deal with the seller or find something that's off market that doesn't get bid up in price, there's value to that, right? If you can raise capital at a lower rate than what I can raise capital at, there's value to that, right? And you can start arbitraging. So, like, it's what is the value that you can add, not, oh, hey, this is what I think I'm worth, or this is what, it's how can you add value, right? Like, what is the added value to that? Hey, I can help you monetize your My First Million in Multifamily. You got 25,000 people in there, and assuming, you know, there's a lot of people out there with podcasts and followings and social media and all that stuff that don't know how to monetize their following. I got a buddy who he's in the e-commerce space. Dude, he's going out to podcasters and influencers on social media and stuff who have big followings, have no way to monetize it, and he's allowing them to white label his products. So that way they just take, he's taking his products, putting their name on it, pushing it out, and they're handling all the emails, they're handling all the interaction, everything, and he's generating 8-figure businesses just off of existing email lists.
Wow.
Right now, right?
Yeah.
It's like, dude, he's adding value to that person. Revenue that they were just stepping over and over again. Now he's able to bring value to them, and they're able to give him access to their list, which is what he wants, because he's got 100 other products and offerings and other businesses that now they jointly own this list, right? And so, dude, it's what is the value that you bring to the marketplace, right? Not just a label of what you're worth, but how do you add value?
And it's just like us bringing value to our investors. You know, if you're making somebody money, they're happy to compensate you for that. So yes, we get compensated through equity and controlling these real estate deals because we're making our investors, you know, yield on their money.
You're creating value for them.
And with my contractor and property manager, they're under one kind of parent company. And after they successfully did a project or two, I started giving them equity in deals. They never even asked. I was just like, dude, I want to give you a piece of this pie, right, to get them further committed, because they were so valuable. They were making me money, and I wanted to. Human beings need to balance those scales, right? When someone does you a solid and the value proposition is out of whack, you know, people want to even that up, and that's kind of, I think, it's how humans bank goodwill, and you can work that for you as you make yourself more valuable.
I love that. I love it. No, I think finding good people, you know, and it's not always about money, right? Sometimes it's about lifestyle or certain other things, but making sure that they know that, like, they're appreciated and they're valued is a big deal, and kicking them a little bit of equity in a project like that for somebody who's over delivering without being an owner. Can you imagine what they're going to do as an owner, right? Of that property? It's they're going to start taking it on as it's their own, which is amazing. It makes your life easier, which allows you to go find more deals, raise more money, and get involved in more projects, you know? By just carving up a little piece of that pie for them, it's one less thing that you have to worry about, you know?
It's funny, I have a guy in the deal room, which is like my mentoring group, and we did a pop-up room and talked about some investments, and he ended up doing something that we were talking about. And then he came to my yacht event and was like, dude, I made, you know, 25 grand in 2 weeks off of that information. And so, you know, I've got a guy for life that's a fan. Like, he's probably going to stay in my little $250 a month mentoring group. I just made him, you know, 100x return off of one. I mean, he took action and he did the work. But that's where giving that value can really cement those relationships. Like Mark Evans with us. I mean, he's given us pointers that have way far exceeded the investment that we've made monetarily, you know, with him.
And it's another investment, right? Like, there's certain things are assets. One is property. We all know, you know, cash flowing businesses, cash flowing property. That's an asset, and you have a return on your investment. That's something tangible that you can actually quantify and see and touch and feel and all that stuff, right? We talked about people being an asset. Another, the right people, the right seat. You know, pushing down the road in the right direction, in those right roles, creates revenue. You can see a return on investment there. Marketing is another one, right? If you know how to actively market and quantify that marketing, if you invest $50,000 a month in marketing, but it generates $250,000 a month in gross revenue, oh, great. And now if I put $100,000 a month in marketing, I should generate $500,000 a month in revenue, right? It's an investment. There's an ROI there, and a big one that people don't realize, they think it's an expense, is the education, man, and the coaching and the mentorship and stuff like that. Like, how many takeaways do you need on a $250 a month group? That's $3 grand a year, especially in this industry of the finance world and crypto world and real estate world and e-commerce world and marketing. Like, how many takeaways do you need in order to be able to get a return on a $3,000 a year investment. It's silly, man. It might not even be money that you make. It could be money that you save considerably, you know?
I mean, I spent over $100,000 to go to Clemson, you know, and I had a lot of fun. And I definitely learned and matured some, but the fact is, paying $5K to go to your event on a ROI far outstrips anything I learned in formal education. I think the whole world is pushing that way, where with the internet, YouTube, Facebook channels, all this stuff, podcasts, you can learn a niche information about what you exactly are interested in, what you want to know for a very, very reasonable price.
Very much so.
You know, a couple grand.
Without having to get on a plane, without having to get in your car, without having to travel, like get a hotel room. Like you can find it all on internet.
I mean, a couple grand and you're in a mentoring group, or you're in you're buying an educational product that can literally make you a lot of money. And it's just, we're able to do that because we don't have to have Clemson University and pay all these professors and have all these classrooms, all this overhead. It's like, I can do one-to-many, I can record a course one time, and I can put it out there for a very, very reasonable price, and you can take that information and make millions of dollars with it. I love it. It's amazing. The internet and social media is amazing.
Dude, and it's, for people who want it, there's limitless access to information, there's limitless access to resources, there's limitless access to connections. I think just there's too many people utilizing social media as entertainment, and they consume on social media instead of actually creating or being intentional of developing relationships on social media, you know? Hey, what's up, guys? Hey, do me a quick favor. Give me your best takeaway so far from this episode of Spill the Beans in the comments below. Smash the like button, show me some love, please. And also, share this, subscribe to the channel, so that way you get all the new episodes of Spill the Beans. Appreciate you. Tell me about the crypto, dude, world. You've been doing some good stuff with crypto. We were working on some things over here. I appreciate some of the insights. Over the past 30 days, put about 150 grand into crypto, and I'm working on launching an investment fund. Because I know a lot of people who, obviously, I was in crypto 4 years ago. It was a distraction because I was looking at prices and stuff all day, every single day, and I was like, it distracted me from real estate, so I couldn't do that. But obviously, you know, I'm having conversations with you. I'm having conversations with, you know, our buddy Jack, our buddy Mark, our buddy Austin, all of our buddies who are doing some big things and making 7-8 figures. Ray, my buddy Gary, like they all have 7, if not 8 figures of gains alone in crypto in the past, anywhere from 12 to 48 months. And so I'm continuing to have conversations with them, learning about it. I just haven't gotten back into it until we were talking offline. I had to get my house in order on some refinances and sales and partnership buyouts and all that kind of stuff this year, and kind of clean up my my plate, trim some fat from my business. And now that that's all off my plate, I'm excited about crypto, dude. I think it's something big. So, what have you seen with crypto over the past? How long have you been in? 18 months? 12?
Back in January, February is when I made my first investment. Yeah, I started, I mean, I have a Facebook post that I seriously regret. It was from 7-8 years ago, and I said, hey, what do you guys think about Bitcoin? It's at 800 bucks. It seems kind of expensive. And I mean, every comment was like, no, that's a scam. Don't do that, don't do that. And it's kind of, who are you listening to, right? And I was not listening to the right people. I didn't do anything. And even if I had put a little bit of money into that and never made anything with it, I would have at least started to study it, which could have reaped huge benefits. The guys that are in that space are really making bank. And so this past December, when our mentor put multiple 7 figures into crypto, that made me think, I can't use the excuse of, I don't understand it. It's too complicated. I don't have the time. It doesn't make sense to me. It was like, it's not a fad. It's not going away. This is the future of finance. This is the future of money. You know, ignore it at your own peril. And when I saw that, because
I like that.
You know, I've got a guy who I trust. I've got a guy that I model to some degree, and he's making a large bet. And this guy, you know, I mean, you know, Mark, he doesn't like to lose money, and he's pretty wise. And the transference of knowledge, where he's always preaching, invest in yourself and pay for the experts. That's exactly what he did. He hired an expert, paid him, I don't know how many grand to come talk to us for an hour. that piqued my interest. I've since hired this coach as a consultant, and I can get his 7 years worth of experience and what does he have, 9-10 figure portfolio, and whatever he's going to advise me of. How can I learn more than him? Like, how can I know more than him? I can condense his 7 years and take his best recommendations, at least to start, right? That's going to give me enough confidence to make I think I made a $50,000 bet on my first kind of buy into crypto. And that also gives you the ability to pay attention to it. When you put money into something, it clears the clutter, and you start looking at that and dig into it. Like, you have 150 grand into a crypto. I know you're researching it. I know you're paying attention to it. Now you feel more confident to maybe put a little bit more. Maybe you eventually branch out and diversify into some other coins. But decentralized finance is what I'm really excited about, which is what the coin we're in is part of. Just creating and replacing those banking products, because we have no clue like how much money the middleman is actually making. When the bank is taking in your $100,000 deposit, then borrowing over $1 million at 0% from the Fed, which is then printed and then loaned out at, from 3 to 4% up to 17% on credit cards, like, that's 100% profit. That money is made up. So
I mean, you could drive to Charlotte and look at the Bank of America building and get an idea of where that money's going and how much there is. You can go to New York, see the JP Morgan buildings, and you can go to, what is it, Pittsburgh, the PNC building. Like, dude, there's a lot of money in that industry, man. And I love the idea of decentralizing it and stirring the pot.
People think that banks are loaning out your deposits, and they're not. Your deposits are a liability to them. They've got to pay those back. But by showing those deposits to the Fed, they can then borrow a whole lot more at very, very little cost and loan it out at a massive profit. That's where the money's really coming from. It's banking has completely changed, and I would say 9.5 people out of 10 don't understand the way it works. And the DeFi is taking some of that profits and putting it back in the hands of the little guy. And it's also taking away the power of the federal government to inflate everything.
And manipulate the currency, yeah.
And crush everyone's savings. We're kind of insulated from that because we're taking on long-term debt, and inflation is helping us. But most people, it's a hidden tax. So I'm super excited about that and the way that's going. But yeah, I think you just got to you got to make a bet, make your best bet of who you're listening to, get some good advice, and then continue to study it.
That's it. I mean, it's like anything else, It's going to take time to become an expert in it. If anybody wants to get involved, or you link arms with somebody who's doing it, right? You link arms with, you get the coaching in place, you get the mentorship in place, you start obsessing over it and gathering all the information. Even then, it's going to take a few years to become an expert at anything. It's that 10,000 hour rule,
Yeah.
And I think a lot of people, hey, I don't want to take my eye off the ball. Kind of like what I did a few years ago. I don't want to take my eye off the ball, but I want to throw money into crypto, right? And so I've had so many people hit me up on this where they're like, dude, well, what are you doing? How are you doing? I have cash. I want to throw it at it, but I don't want to create a wallet. I don't want to, engrave into metal and keep something in a safe in San Francisco and in New York. And like, you know what I mean? Like they don't want to deal with any of that stuff. They just want to write a check, which is why, like, we're putting a fund together. You should probably look at doing that with your group too, by the way, of just, dude, it's a simple 506c investment fund. You invest in the fund, write a check into that fund, and then that fund will deploy across many coins. It'll be diversified. We'll do a dollar cost average over the course of a little bit of time. Look at some that are high growth, some that are pretty stable and steady coins, and a balance of all those. And I'm telling everybody who invests is like, dude, this is not a get rich quick. We're not day trading this stuff. This is an industry mover, right? The whole industry is going upward. Put money in, we're going to deploy it, and we're going to see what happens. Like, think about what happened to Bitcoin over 5 years, right? It's gone from 800 to 60,000 right now. I think it's 58,000 as of last night. And that's one coin, dude. There's a lot of higher growth coins than that one slow mover, you know what I mean? And so, like, invest in the fund, set it, and don't think about it again they'll get their statements and all that kind of stuff. But dude, put the money in and don't think about it again for the next 5 years. And then we're going to return everybody's initial investment capital, and we'll do some sort of an equity split Beyond that, I'm not taking any acquisition fees. I'm not taking any asset management fees. Obviously, the fund will cover any like accounting and bookkeeping and that kind of stuff.
But you're adding value. You have people that have the desire to invest in crypto, and there is a steep learning curve. I mean, when we first started getting into it, it's like wallets, and you send it to the wrong address, and your coins are gone forever, and people can hack you, people can steal you, and seed phrases, and all this stuff that you just is a little overwhelming when you're first getting into it. And there's a lot of people that maybe in our generation or the baby boomer generation that are intrigued by that, but they're not tech savvy enough, or they don't want to go through that. They just want to have someone they trust, transfer the trust over and say, here's, $50K, $100K, let's see what you can do with it. And you got to realize it's a high risk asset, and you need good advice for something like that.
Yeah, you don't put all your eggs in one basket. You don't even put, I wouldn't even put 50%, right? Unless you got crazy amounts of money or whatever, or you really know the asset class. But dude, I think it would be, you would be so careless, negligent, I don't know, maybe that's not the word, but like, you can't be so risk averse that you're not willing to put somewhere between 1 to 10% of your net worth into crypto. I think, like you said before, man, it is the biggest shift in the financial sector. I think, dude, since the minting of coins in ancient Rome, I don't think anything will move the needle on the finance industry like crypto has. Like, even coming off the gold standard is a drop in the bucket compared to what crypto is going to do to the entire financial sector. And I just think there's so much opportunity in it, man. And I don't know, what do you think we're at the first 5%, 10% at most, like, of where it's going to be? Like,
yeah,
the big retailers haven't adopted it. It's not on Amazon or.
You're still early adopter in a pre-viral phase. I mean, crypto has literally only existed for 10 years, if that. And you think about when they first started inventing PCs or the internet or cell phones, it was 10 to 20 years before it really took off. I mean, not many people had the car phone, the bag phone, the desktop computer. But eventually, I think within the next 20 years, it's just going to be everywhere. And
dude, I'm buying it. I'm never pulling my money out, dude. I'm going to sit on it for 20 years. This is all money. It's like retirement account, right? Like, you put money into your certain retirement account. You don't expect it until you're 60 years old. I'm putting this money in, man, and I'm just funneling cash in as much as I possibly can and thinking this is going to be retirement.
Well, and there's a lot of cloudiness around what is it. People are thinking, well, cryptocurrency isn't useful, right? I can't go to Walmart and swipe my crypto card and buy anything, or if I can, the transaction fees are huge, and they're absolutely right. And it's kind of like when the internet was coming about, it was just a web page, and it was a very limited use as to what we were even knew what the internet was for. And I think that there's this misconception that it's not an efficient currency, it's not stable, it's moving up and down all the time, it has high transaction fees, and so it's a failure at its stated purpose. But what if its stated purpose is not to be a currency to replace the dollar? It's more I see it as more of an asset class right now, almost like a stock or a bond or a company, and eventually it will become that, a reserve currency.
Well, I think most of the coins, what people don't realize is, like, they have some sort of utility behind it, right? Like, there's some sort of, it is backed, kind of like a company is backed by whatever the products or the goods and the services that company creates in a stock. That stock has value. Same thing with the utility that many of these coins have. And there's not really a coin until, I think Hex is like the first one that's meant to be an actual storer of value, where it's actually supposed to have some sort of, it's supposed to be it's meant to be a currency, like Bitcoin's not meant to be a currency, but Hex actually is. And so I think you're going to see a little bit more of that. It's going to be interesting to see all these different coins and all these different technologies and how they use the blockchain technology to revamp every industry. Like, dude, I keep thinking about real estate and like the title industry, like it can completely eliminate the entire title industry. You don't need title companies anymore because it said, hey, here's when it transacted. There's no claims on it. And dude, it's just like, it's so clean in the blockchain ledger, how properties transfer and who loaned money on it and who didn't loan money. Like, you don't have that issue anymore. It completely eliminates that industry. And that's just dude, I think the tip of the iceberg, you know?
And with the
raising capital, it's like there's so many ways.
With the advancement of NFTs, you know, non-fungible tokens,
Yeah.
images that cannot be duplicated, and it creates scarcity to a digital product, so that title can be on an NFT. And I mean, they're now, I don't know if you know this, Mark mentioned it the other day, but there's already a company tokenizing real estate and selling
I've seen it, yeah.
shares in their real estate holdings through tokens.
It's essentially taking the entire world and digitized every single parcel in the entire world. And you can buy the digital portion of this building or of this condo or of this park.
There's a blockchain launching on the 18th that's digitizing carbon credits. So carbon credits are fraught with fraud and duplications and double dipping in these carbon credits. That is huge, big business. I mean, companies are buying billions of dollars of these carbon credits to offset their pollution and clearing land and whatever. And so this company is creating a digital blockchain record of all these carbon credits to bring transparency to that, which I mean is not something that I would have thought of or pursued, but there's going to be so many applications that we don't understand right now. And I'm spending 1 to 2 hours every day studying this. Like, that's how important it is to me.
Where would you go for those resources to learn about this? You just start Google searching and YouTubing different videos? Are there certain people that you watch, certain channels that you watch?
Yeah, it kind of goes back to who you're listening to, because there's a lot of, it depends on your style, but they're pushing pump and dump coins, they're pushing trading in and out, they're trying to get views, right? Remember, what's motivating the YouTuber is he wants or she wants views. That's how he or she is going to get paid. It doesn't necessarily mean that they got to give sound advice. They want
Which
views.
is the flash and pizzazz stuff, like in real estate. It's like the wholesaling or the get rich quick or like the quick stuff, but that's not how you build real long-term wealth. So you got to find certain people.
And you think about, if you think logically, the person that actually has $400 million in crypto, is he out there broadcasting that he has this money? Is he out there like creating YouTube channels and teaching everybody what he's doing? Most likely not. I mean, that's where I like our guy. I think it's kind of the networking, who you know. I connected with another guy in a mastermind who gave me a tip on another coin I just went into, and he's connected with ICO circles in crypto. And that's, I think, how you do it is relationally versus YouTube University. I mean, there's a ton of good basic information, but if you're going to really dig into this and try to get on the cutting edge of crypto, I think that, you know, I like Gerardo for Hex. Gerardo has a great channel for a lot of technical analysis. But even he, I mean, I think these guys, they get so deep into the weeds of staring at this stuff every day, trying to predict every little movement. You got to step back and take a macro look at this stuff.
Yeah, yeah, dude, it's wild stuff, man. It's kind of crazy that we're in the mix of it and in the middle of all of it. And here's what I don't want. I don't want my kids to be like, Dad, you missed the boat. You know, like, Dad, you're supposed to be in the financial sector. You're supposed to be in the financial industry, and you know, seen as somebody who advises people on wealth, and you didn't invest heavily in crypto. Like what were you thinking? And I just think the upside gain, the upside opportunity, just so far outweighs the downside risk of losing a few $100,000 of that potentially, you know, 100xing over the course of a few years. I mean, you've seen that happen in less than 12 months on many coins. And I think in 5 years what it could turn into, it's like completely life-changing type of money, man.
Well, Bitcoin 65 million X, Ethereum 14,000 X, Hex 10,000 X. There's plenty of other ones that have done 1,000 X. Like
not 10%, 10,000 X.
Right. You hit one of those with a $5,000 to $10,000 investment, that's life-changing. And so you've got limited downside, 5-10 grand, massive upside. You know, I think, yeah, and ignore it at your own risk.
Yeah, but you got to put, you know, you got to land on that coin. So it's almost like venture capital almost, where they invest in 100 different small businesses, seed capital, intellectual capital, relationship capital, and then, you know, they expect 4% of them to hit it big. 96%, they'll just kind of be worth whatever they invested into them. They're not necessarily losers. It's just they don't hit big, but a few of them do. And you know, you know, we try to look at crypto and liken it to these different other assets like stocks, and like venture capital and like real estate and like different things like that, but it's a little bit different. But I think you can take ideas and insights and knowledge and experience from all those different other asset classes and what you've learned in all those other ones, put it into, and you take the knowledge that you got and knowledge that you've gained and gathered, and you put it into how you're going to attack crypto. And I think there's some basic principles that you could do. Invest in many different coins. And
talk about the staking aspect. I think a lot of people don't even realize that that's a thing. They have no clue about staking, which is generating interest on just holding your money. So if the coin goes up, you're making money, sure. But if the coin goes down, you're still generating more crypto, which when the price recovers is worth a lot of money. And if it's just trading in a sideways range, you're still making interest. And this interest can be significant. I mean, in Cardano, you're making, which is a pretty stable top 3 currency, you're making 6-7% in passive income. In Hex, depending on how long you're locking it up, you're making 22 to 40%, 40% APY, which is magnificent as it compounds. And then there's some other crazier.
Realizing it's like staking
coins.
is like a CD, right? So a CD, you go and put your money with the bank, and you can't touch it again for the next 3 years, but they're going to pay you a higher than market interest rate. And so staking is very similar to that, where you commit to leaving 10 grand into a certain coin, and then they pay you for locking that up. There's heavy penalties, there's heavy, you lose some of your principal and all that stuff if you have to access that coin before that timeline is up, before that term expires. But like you said, dude, the interest that's paid is paid in that coin. So as that coin value goes up, your overall principal goes up, and a lot of times it's compounding on a daily or weekly or basis, and not just annually.
Exactly. And when you understand compound interest, it can be super profitable.
It's a game changer, dude. It's a game changer.
And a lot of these coins don't even have lockup periods. You can unstake them at any time with no penalty. Hex definitely has heavier penalties, but it's a really cool passive income play that I like, because if you have capital in there, as it goes up, you don't want to pull it out, right? Because it could go up further. But when you have passive income getting paid in, you can leave your principal there, scrape off, $5,000-$10,000 a month, and you've got a good lifestyle with a big nest egg, and you're not touching that nest egg. And I kind of, at least mentally, that helps me to sort of be able to take a little bit of profits from crypto instead of just like, oh, I want to leave it in there forever, hodl,
Yeah. No, man, it's fascinating stuff, and I love where the conversation went, dude. We're getting long on time, so dude, I appreciate you being here.
Yeah, man.
I will. We got to do this more often, man. I mean, we're both in town. We gotta hang out. We don't hang out enough.
Let's get on the boat.
Let's do it.
Looking
forward to it. Appreciate you, brother.
Peace.
Good stuff. I love where the conversations go. It's really cool to see somebody who's progressed so much over the past 36 months in his own entrepreneurship, in his own confidence level, and obviously in the real estate side, but he's also doing some major things in the crypto space, to the point where he's got some big upside on some of his investments there. So if you're not connected with Jennings, make sure you're connected with him. He's got a lot of good stuff. He's always sharing great content. He's a great person to follow on social media and get plugged into a lot of the stuff that he has going on. I'd love to hear your greatest takeaway in the comments section below. And like always, please like, subscribe, share this with some other folks who you think will get a ton of value out of it. Until next time, be your best.